An extra $500 could go in your pocket if you're on Social Security due to this newly proposed Social Security bill in Congress right now. With this bill, it could change the lives of a lot of Social Security recipients because the way it works right now, that $500 is actually going to the US government. With this newly proposed bill, that $500 could go in your pocket. So if you want to know exactly how this works, I'll show you. So new bill proposes eliminating Social Security's most hated tax. Another headline right here, new bill would help Social Security lump sum recipients avoid tax hits. With these taxes that are in place right now with Social Security, someone making extra money is actually given that money to the US government instead of going in their pocket. This could be $500, this could be $1,000, this could be thousands of dollars over the course of just 1 year that could be saved and go into the pockets of Social Security recipients instead of into the pockets of our government and our Congress members. So I'm going to show you exactly how this new bill works, how it could benefit you if you're on Social Security, and I'll give you some other important updates as well. If you appreciate the regular updates on Social Security, hit the like button and subscribe to the channel for more updates on increases, decreases, latest bills, and proposals in Congress right now for Social Security. Subscribe to the channel. So let's go over this right here. New bill would help Social Security lump sum recipients avoid tax hit. So basically what was said here from the Social Security, one of the members here saying, disabled beneficiaries must satisfy a waiting period of several months before benefits start, but they receive a lump sum retroactive to the date of being found eligible for benefits. What was said here is retirees can also choose to file a claim for up to 6 months in retroactive benefits when they first apply for benefits. So this is the Social Security, the Fairness in Social Security Act. So with this bill, I'm going to go over more detail of it. It changes a lot. So a new bill proposes eliminating Social Security's most hated tax. Does it have legs? So every year, between 80% and 90% of retirees are reliant on their Social Security income to cover some portion of their expenses. The taxation of Social Security benefits was introduced 40 years ago and is an almost universally despised law. With the Social Security facing an estimated $22.4 trillion funding shortfall through 2097, removing or altering one of its income sources doesn't appear to be an option. So an overwhelming majority of seniors want this Social Security tax gone, but legislation to get rid of it faces major hurdles. For the past 22 years, National Pollster Gallup has surveyed retirees to gauge their reliance on the income they receive from Social Security. Without fail, between 80 to 90% of respondents every year lean on their Social Security check to cover some portion of their expenses. Ensuring the financial health of Social Security is of paramount importance to more than 49 million current retired workers, as well as the well over 100 million working Americans who will one day be eligible for a monthly benefit. For some on Capitol Hill, this means a complete overhaul of the program. Prior to being elected president in November of 2020, President Joe Biden released a 4-point plan that outlined major changes to Social Security. His proposal included a reinstatement of the payroll tax on high earners above $400,000, as well as an assortment of changes and designed to increase payouts for lifetime low-earning workers and age beneficiaries, those 78 and above. However, there have been many introduced bills, reintroduced bills when it comes to Social Security. So this bill right here would put an end to Social Security's most hated tax. In May, Massey and more than 24 co-sponsors reintroduced the Senior Citizens Tax Elimination Act, which would eliminate the federal government's ability to tax Social Security benefits. This is actually the 6th time Massey has reintroduced this legislation since taking office in 2012. It's over 10 years ago. To stem all misconceptions, Social Security income is taxable at the federal level, and in 12 states, depending on how much an individual couple earns, is paid from Social Security. So, to give you an idea of what this tax is like, if an individual's provisional income, gross income, plus tax-free interest, plus 1/2 of Social Security benefits surpassed $25,000, up to half of their benefits became taxable at the federal rate. For couples, this figure stood at $32,000. So that means if someone made an extra $1,000 for the year, you would be taxed on that $500. That's $500 that is out of your pocket and instead going into the government's pocket, which $1,000, if you are retired, is a lifesaver. That's a lot of money. That could make a big change right there, which is hurting a lot of seniors instead. So what was said here, eliminating the taxation of benefits is virtually an impossible task. While there are plenty of Social Security proposals that a majority of Americans support, such as higher payroll taxation on the wealthy, there isn't an issue with more lopsided support than the idea of getting rid of the taxation benefits. But given that Thomas Massie has brought the Senior Citizens Tax Elimination Act to the House floor on 6 separate occasions over the past decade, the writing is on the wall that the proposal has no traction. So despite the perceived unfairness of taxing Social Security benefits and failing to adjust the income thresholds for inflation over 30 or more years, 2 seemingly unsurmountable headwinds stand in the way of the bill that addresses this topic. The biggest issue is that Social Security is facing a funding obligation deficit and an estimated $22.4 trillion over the next 75 years, according to the latest trustees report. So although the program brings in 90% of its revenue from payroll tax on earned income, $48.6 billion in income, 4% of the total income, is derived from the taxation of benefits in 2022. So although pretty much everybody doesn't want to be taxed if you're on Social Security, looks like according to this data, it brought in $48 billion in last year, taxing people on Social Security, their Social Security benefits. So although this was reintroduced many times, looks like this may not pass, and it looks like this is going to be stuck in Congress along with a few other Social Security bills. Let me know your thoughts on that. Should there be some other type of change? Have you been taxed through this bill? Let me know your thoughts on that. And that is all the news that I have for you today to hopefully cheer you up a bit. Here's my daughter Bella's tip of the day.
Hi guys, I want to tell you the one thing that you can do to yourself. Be kind, be smart, and also you have to be kind to your mommy, your daddy, or your brother, or sister, or anything that you want. And also you have to be kind to yourself.
Thank you so much for watching. Appreciate all of your support. If you want to check out any more Social Security updates, don't forget to hit the like button and subscribe to the channel and click this video right up here as I'll give you the latest updates on Social Security. So click that video link right there and I'll see you in the next video. Take care, be safe. Thank you for watching.